gave a speech in London called The Ideal Trading Mindset. The theme of the talk was, how do you develop the right kind of trading mindset? How do you train yourself? If I want to be a better tennis player, I go out and I practice. I play a lot of matches and I improve, but how do you get better as a trader? That's what the presentation was also about. So I got the laser pointer here. And just bear in mind, I can't actually see any of your comments. So the argument here is that normal thinking doesn't lead to profitable trading. I want to tell you why I believe that. How did I come to have that belief system? Well, it started 21 years ago. I was 3 days into my new job at a brokerage called Financial Spreads, and I was invited to accompany the best clients of the brokerage and the directors out to a day on the race course, on the race courses. And it's a day out called the Ascot. I always know it as the ladies are wearing funny hats and the gentlemen are drinking champagne and smoking cigars. So there I was, and the CEO of the company, he had introduced me as their newest recruit. And then this is the funny bit, at least I think it's funny. He's saying he knows charts, as if knowing about chart analysis was some kind of novelty back then. But it was, because back then, 21 years ago, the trading platforms had no charts. When I worked at City Index, there were no charts. So there I was on board this executive coach, and I was being introduced as the person who knew about chart analysis. The first person that just sit down in front of me was a gentleman who owned a string of pharmacies up in north of England. And he said to me, could you please analyze this chart here? And I looked at it, or I remember it, and it was a company called Marconi. Now, what's interesting about Marconi was that it had been a bit of a darling in the FTSE 100 index, but it had fallen from grace from a price of about £12, 1,200 pence, down to, at this point when I spoke to this gentleman, was trading around 300 pence. The story of Marconi, actually, eventually it went bust. It went to zero. Now, but what's interesting here was that this gentleman had bought a little bit when it had retracted off the highs, because he was thinking it was getting quite cheap. Then he added to his position down here, and then he added to his position down here and here and here and here, because as he said, this has got to be the cheapest company I've ever come across. Now, at the time, I wasn't able to formulate my opinion as I was later, but essentially it was the first time I ever came across an individual who was not trading or investing on the merit of what he was seeing in the market, but what he was actually believing. And he had the misguided notion that a stock that had fallen a lot in price was cheap. But as I said at the time, I wasn't able to verbalize what I know to be true today. It was to be a few years before I got my next lesson about mass psychology. It was the study that I've spoken about many times by now from Rodriguez from FXCM, who, together with his staff at FXCM, had analyzed 25,000 of their clients' behavior over a 15-month period, where they executed 43 million trades in FX. Now, what was interesting about it was that the outcome of this actually revealed that their clients were very good at identifying winning, so we say trading setups. But the problem that they had was that when they won, well, they won decent, but they lost a whole lot more than they won. And so even though they had a very high success rate on their profitable trades, overall they were net losers. Now, at that point, I had been exposed to the behavior of the clients of City Index, and I've become acutely aware how frequent it was that people would be betting against the trend on any given day. So for example, if the Dow was marching up the page, clients would like to sell short. And if it was falling, you could be absolutely certain that they would want to try and buy the Dow. And sort of armed with that knowledge, I began a journey of, shall we say, self-discovery. I also became much more mindful of what it was that the brokers all over the world were doing to their clients. So for example, any given broker, this is from Pepperstone's web seminar section of their educational, on their educational area. And when you look at it, it's all about, well, how to read candle charts, how to identify trading opportunities, how to figure out gaps and slippage, and how you can day trade Forex. And whilst there's absolutely a place for this, there is a place for, shall we say, learning about the basics of trading. It seems now that we seem to have proverbially put the cart before the horse, and all the focus is now on technical analysis as if this is going to make us better. So I became much more mindful of that. Even though brokers meant well and educators meant well, all their focus was on the wrong thing. This is not new. I mean, this goes back, this chart here is from 90 years ago, and this is from a course that a gentleman called W.D. Gann sold. And back then, I think it cost the equivalent of the annual salary of a typical worker. And there's so many lines and so many dates, and he sold his courses through the narrative of an America that to some extent was religious. He sold his courses on the premise that he had found a code in the Bible. And what's so puzzling is that even now, many, many years later, you still have people who rave on about how great Gann is and how much money they are able or could make from knowing about fractals of 8 and 2/8 and 5/8, and the moon has gone retrograde Mercury and Venus is up Uranus and so forth. And it's actually frightening that there are still people able to sell this bullshit, but they are, because it is appealing to a part of our brain that goes, well, if it sounds complicated, it must be worthwhile learning about. Now, when you look at how far we have come over the last 20 years from when I started trading, it is mind-boggling how much more advantageous it is today compared to, say, 20, 25 years ago. When we day traded the Dow 25 years ago, we were paying an 8-point spread in the Dow. That meant that if you bought the Dow, it had to move 8 points in your favor before you were at break even. So spreads have come down significantly. Knowledge sharing, like what we're doing in Telegram right now, is at an all-time high. It's never been so readily available. Markets are practically trading at your disposal 24 hours a day. You have charts on your mobile phones. Historical backtesting is available to us. And through, we have never been as informed about trading as we are today. Yet when all that is said and done, we're still operating with a failure rate of around 76 to 80%. And as I jokingly said, if that was a dentist school that had a 76% failure rate, you would have to question the teacher's methodologies. Yet, and say this was a school where you're contemplating sending your daughter or your son. 1 second. Okay. And so if this was a school where you're contemplating sending your child, your boy, your girl, and they had a failure rate around in the 70s and 80s, you wouldn't send them there. You go, no, there has to be another way. And what I am proposing is, what is the other way? Because if normal thinking and normal behavior doesn't lead to profitable trading, the obvious question begs, what does? So I wrote a book, as you know, which isn't a book about technical analysis, but it's all about how we as traders go about trading, which is the wrong way around. So here's a little audience question time. How important is the right mindset in trading? And this was a question that Steve Ward asked at the symposium early on this year. And it was an interesting question because people sort of started to chip up. Well, I think successful trading is 90% strategy and 10% mindset. And other people were saying, well, it's important to have the right strategy, but it's also important to be able to follow the strategy, and that comes down to mindset. So by general consensus, we sort of landed at a 75%. That's how important mindset is. So if mindset is so truly important and we can't actually make our way to profit through the use of techniques alone, then it does beg the question, well, why is everyone focusing on technique? See, most trading techniques will at best have a 65% chance of success. So a little more than a coin flip chance of 50-50. But if that's the case, why do 90% of people lose? 90% of people don't lose on a coin flip game. So when you travel the internet and you frequent yourself with bulletin boards and newsletters and the likes, you will be subjected to the how of trading. The how do I use a moving average? How do I use candlesticks? How do I trade the Dow? How do I trade the DAX, the FTSE, and so forth? All the focus is on techniques. It could be product knowledge. It could be knowledge about money management, etc., which are all important things. But there's absolutely no focus on what are you going to do when you're just about to self-sabotage for the umpteenth time. How do I deal with not taking the trades when I fundamentally know I should be taking them? How do I take a loss when I simply can't get myself to do it? How do I execute a trade that I know I really should be executing? And so what I wanted this web seminar to be about, and the one in London, is why do we focus all our mental energy on strategies and entries, when in reality, you should spend time on analyzing your psychological weaknesses. What's your weak game? So the foundation of successful trading to me is technique. There has to be a foundation of it called technique. But once you've mastered that technique, of course you can improve, but I think it's much more important that you actually begin to learn about your weaknesses, which come down to your behavior and your process. So I argue that getting to know yourself makes you a better trader. It makes you a better person, but it also makes you a better trader. And I'll give you an example of this. So here's the FTSE, and we are seeing a market rallying, but right down here, where the laser pointer is right now, we are witnessing the market has made a low below the highest bar of the day. So the highest bar of the day is this bar that we're seeing here, and we have now closed below the low of the highest bar. And especially when this is in the context of a double top, this is a reliable sell signal. So I'm selling short right here in the FTSE. And, you know, it is what it is. Maybe it'll go well, maybe it won't. And then what happens is that the market then makes a push above, at which point I'm going, oh, this is not looking good. But then it comes all the way back down again, at which point I'm thinking, it's all good. It's going to go back down to the lows again. But then what happens over the subsequent bars, actually, let me just pause for a second because I think this is important. So what you're seeing here is Rafa Nadal and Roger Federer headed out to center court for one of their epic battles. It could have been the one in 2007, could have been the one in 2008, but it's not actually those two I want you to look at. What I want you to look at is this. See, this is a quote from an author called Rudy Kipling, and the poem is called If. If you can meet with triumph and disaster and treat those two impostors just the same, then you shall be a success, if you can do that. He wrote it to his son or sons. And what I took away from that is what he was trying to tell his sons is, go through life with a degree of humility. Don't be too excited when you win, and don't get too despondent when you lose, because those are just emotions, and those emotions are just, like a candle in the wind. It's not sustainable. But what is sustainable is how you go about your daily life and your process. And so the imposter of success, or triumph as he calls it, disaster, well, they're just emotions, but they will detract you from the real journey, which is the journey of being able to follow a process. So when we move on to this, and we see here that the FTSE over the ensuing 2 bars are making a high above that candle, which we saw here, I am beginning to think I'm not in the right position, and I get stopped out. And I get stopped out here at above the highest high of the day. Okay, tough luck, another trade, but that's not quite how I see it. The way I see it is, what can I learn from this? Is there a lesson that I have missed here? Should I have done something different? So when I highlight what's going over here, up here, what I pay close attention to is this candle here, this long candle here, because the market had closed below the low of the highest bar, which to me was a sell signal. Then we get a push higher, which goes all the way back down here. And in my book, this market should have continued lower, but it didn't. Instead, it rallied. And I began to go through the days and the weeks and the months and the years before that, going, hey, is this something that happens frequently? Because if it is, I want to know about it. This is something that I want to learn from. Now, learning from failure is something that very few people engage in. But my role model is a gentleman called Kobe Bryant. I am in awe of Kobe, and rest in peace. When Kobe Bryant died earlier, he was the attention of many journalists all over the world. And they were talking about how an amazing basketball player he was for the Lakers. They were talking about all the records that he broke, how many times he made the NBA, etc., etc. But it took a journalist from the Guardian newspaper called Andy Bull, and he was talking about a different vantage. He was addressing Kobe Bryant from a different vantage point. He was addressing it from his failure rate. See, it turned out that Kobe Bryant, he racked up 14,481 missed shots during his career, well over more than 1,000 than the second player on the list. And so the journalist concluded that actually Bryant's success story began with working to conquer the fear of failure. You see, on this previous trade that I just executed, it was so easy to just dismiss it as, oh, well, nothing to learn. It was just another losing trade. But I saw it differently. And I believe that that's a mindset thing, that much of our progress as a species and as individuals comes from our setbacks, that we learn from our setbacks. Therefore, our relationship with setbacks is highly correlated with our position in the food chain, both in society and within the hierarchy of our work, within the hierarchy of employment, maybe on our social status. Do we treat setbacks as just that, a step back with no lesson? Or do we learn what is needed to be learned, if anything? Did we appear a little wiser the next time a similar situation appears? So when I look at this setup here, as benign as it may appear to you, it actually turns out that this is something that happened quite frequently. Market closed below prior bar's low, and it looked as if, oh, it's going to fail here, and then it marched higher. I got a market that is close to closing below prior bar's low. It looks as if we're headed lower, and boom, high again. Market makes a retracement of 3 or 4 bars, closes below prior bar's low, and up here, it looks as if market is headed back down again because we got a push higher, and then we close it all the way down, and yet the market somehow managed to find the strength. And so I began to think, no, there's something I need to learn here. And I went through years and years of this particular pattern, just looking for this particular pattern, so that I may be 100% prepared for it the next time it was to happen. And then, these are a couple of more examples of this. And then something really interesting happened. I was trading the FTSE in an evening not long ago, here in November. And I executed 2 trades in the FTSE at £300 a point at 7,362. Now, what was interesting about it was that it looked to me as if the market is double topped, trending lower, and this is just a retracement. But then what occurred to me was, as I had executed the trade, it occurred to me, hang on, what is this thing that I'm seeing right here? And it turns out that that's the exact same pattern that I had done so much research on, and it had just slipped under the radar. And I saw it, and I go, wow, I shouldn't be short here at all. I should be long. This is a mistake to be short here. Had I not done those hundreds of hours of research in this pattern, that lesson may have slipped me. But instead, I took my lost about £4,500, £5,000, and it was in the trade for only 3 minutes or so. And then I very quickly reversed long. Now I know what you're thinking, saying, yeah, anybody can say that. So I'd like to prove it to you. Here's my track record. Here's the trades. Here you see, I'm trading, this is 70, buying it, 300, another 300, another 300, another 300, another 200. So I'm about 1,100 pounds a point. Now, not all of the trades are held all the way, but eventually the market did grind up, and the best trades were the one that I executed near the highs of the day. I didn't make back everything that I'd lost, but I made 90% back of what I lost. And I came out of that trading session thinking, thank you, Kobe Bryant. Thank you for teaching the lesson of setbacks. Because had I not been inspired by you, and had I not done the work on this particular pattern because I was annoyed that I'd lost back then, I would never have gotten a lesson. And I hadn't gotten a lesson, well, I may have been inclined to hold on to this trade a lot longer than I should. But I didn't. I took the loss. I moved on. And while this is not entirely a success story in that sense that I made everything back, well, I made most of it back. And that to me seems like a victory. And also an enforcement, a reinforcement of the right kind of behavior. So the solution, as I call it, part one, is review and discover. Review your old trades, because in there lies an acre of diamonds, invaluable lessons for you to learn from. But it leads me something different. It leads me something to the next point, and that is it even possible to practice trading? What I call deliberate practice. And it turns out that I have found a way, and I'd like to discuss that with you. The person you're seeing over here to the left, lady, could you shut the fuck up? Some of us are trying to work while you're yip-yapping away. You know, be respectful. This person that you're seeing here is a gentleman called Malcolm Gladwell. He wrote a book called Outlier. Yeah, fuck off. He wrote a book called Outlier. And Outlier suggested that if we do something for 10,000 hours, we are going to be experts. It's essentially the difference between average performers and high performers is that they have practiced a whole lot longer than the average performers. And I read that and I probably swallowed it hook, line, and sinker. But there was something about it that didn't resonate with me. And I based that on my own driving. I have been driving for, 30 years. And then I was invited on my birthday to a race course where I put myself into one of those performance cars. I think it was a Mercedes-Benz GT S version. And I had a driver who basically said, do this, do that. So I was driving. And I realized that while I think of myself as a pretty good driver as I'm racing down the motorway, the Autobahn, actually, that's not driving. That's just cruising straight ahead. If you want to improve, you really got to give your mind a challenge to solve, because the challenge for a mind is not there if you're just doing what you always do. And it reminds me of, let me just go to this one here. I was watching Wimbledon a while ago, and there was a commentator who was passing comment on one of the tennis players. And he said, practice makes perfect. And then Tim Henman, who's a bit of a legend within the English the English tennis community, he said, no, practice does not make perfect. Practice makes permanent. What does make perfect is perfect practice, which was something Vince Lombardi was out. And he's an American football coach who gained an incredible notoriety for his performance and what he was able to bring out in his players. So we go back to Malcolm Gladwell, and the gentleman to the right of Malcolm Gladwell is actually the architect of the research. And his name is Anders Ericsson. He's a Swedish researcher who works at an American university. He was the original proponent of the 10,000 hour rule. But as he stated in an interview, look, I never said that if you practice something for 10,000 hours, you become an expert. What you need to do is you need to create what I call deliberate practice. And the way to create deliberate practice, for example, in the context of trading, is that you set yourself a specific challenge, because your brain is a problem-solving mechanism. And if you just say, I'm just going to study charts, you're not going to learn anything, because your mind is just going to glance over what is always glanced over. But if you say to yourself, I am going to find out all the single times that the FTSE makes that pattern that I just showed you, and then I'm going to document it, I'm catalog it, and then the next time I see it, I'm going to trade it. And so what Anders Ericsson basically said was that the people that he had researched, the violinists, the pianists, the athletes, they only become experts because their coaches had set them specific challenging tasks that they had to solve. So it wasn't just a question of doing the same serve over and over. Instead, it was about doing the same serve, trying to land it in a particular challenging part of the court, for example, or that your fingers had to learn a very specific, deliberate sequence to play the violin. That's how you improve, by actually tasking yourself with a very, very specific sort of behavior in order to uncover a new behavior. And what in turn that does is build neural networks. Now, ladies and gentlemen, now perhaps you understand why I like to get my sleep and why I make sure that I exercise and I eat well, because this kind of behavior takes an inordinate amount of energy. Living consciously takes an inordinate amount of energy. And so what Ericsson basically said was, Malcolm Gladwell, you got it wrong. It's not about doing something for 10,000 hours. It's about doing it deliberately and truly, truly challenging yourself. Now, how can we do that as when we don't have coaches? And I remember my ex, who was an exquisite ballerina. She was teaching me about the Swan Lake, and within the Swan Lake, which has been dazzled audiences for decades, she's talking about that there's a sequence called the fauteuil. There's a 32 spins on your foot without putting the other foot down. And it's this constant balancing act without getting dizzy. And she said, look, you don't go in and you start balancing. You don't start balancing for 32 fauteuils. You do them one little bit at a time, and you build up a big picture until you can begin to actually do this flat-footed. And then once you've done it flat-footed, then you begin to go up on your toe for 1 or 2, and you go back down there, and then 2, 3, and 4, and so forth. And this particular sequence in the Swan Lake has been the bane of ballerinas for more than a century. And those who have mastered it, they didn't just go in and go, yeah, I'll just keep practicing it. No, they set themselves small, deliberate tasks and then solved one piece of the puzzle at a time. So I have split my trading training into different categories. And I must admit, I've also split many other things in my life into different kind of categories. So I'll call the first one specific improvement. And so the specific improvement is, say, I feel that I wasn't good at trading trend dating days. So I found all the trend days I could find that happened on a Friday, for example. And I began to make notes on, well, how am I going to trade these on a Friday? How do you actually trade a strongly trending day, especially when it's a positive day, which seemed to be my Achilles? How do you do it? How do you actually go about doing that? Navigating around your fears of being the one that is buying the high tick of the day, and going through these exercises day by day by day, hundreds of them, I was able to actually come up with strategies that enabled to say, you know what, I am going to do this, and the way I'm going to do it is by, fill in the blanks, because I don't want to deprive you of your own research. Let's take another example. Let's take FOMC trading. Not so long ago, we had the FOMC, and I served you an 80-point winner, which took us about a minute and a half, and bang. But what you don't know, that there was hundreds of hours of research gone into that particular sequence of events on that particular day. I had taken every FOMC event that I could find over the last 10 years, and I had meticulously gone through every single one of them, finding out how do you successfully trade FOMC. And I came up with a trading pattern that I call the Rule of 4. Again, I'm not going to deprive you of your own research, but the Rule of 4 has been something that you have been subjected to, probably without even knowing it. You just heard me say, we're shorting the DAX here, or we're shorting the Dow here, or whatever it may be. But going through every single one of these FOMCs, I found a way to successfully navigate this particular and oftentimes very difficult market to trade. That was my mind being tasked with a very specific exercise, being how do you trade FOMC? When you look at the school run, same story. How do you trade the DAX successfully in the morning? And whilst not everything that I do is turned into gold, for example, I charted the S&P 500 against the tide in the Hudson River, which turned out to be an absolute dud. It just does go to show that I set my mind a specific task, and then I went about to solve it. Now, what I also need to remind my brain of is don't be complacent, because you know what? You have a tendency to do the wrong thing at the wrong time. So I need to show my mind, my brain, what can go wrong if I don't excel in the right kind of behavior. So what you're seeing me doing here a while ago, 9 years to be exact, I went long the FTSE at 6,064, and then I bought some more at 56, and the market went down, and I bought some more at 35, and I bought again at 25, and then in the end I closed the whole thing, and I lost £17,000. Do you think that's good trading? I don't. It's awful trading, and that is the point that I need to remind my brain of periodically. Because you have to be the master of your own kingdom, but you also need to acknowledge that your mind has at its core function to enable you to forget pain. As its core, it wants to protect you against pain. It means that it will protect you against remembering the losses because, hey, that's painful. So I am going to do the exact opposite by saying, fuck you, brain. I need you to remember how badly you can act when you're under stress. So don't you ever dare adding to a losing position. But what's the opposite of adding to a losing position? What's the very opposite behavior? It is to add to a winning position. And that's why we're doing it. It is not just that we make more when it's going well. It is also that we are counteracting the very things that our brain has a tendency to do to us. And I don't want that. This is a stupid example. But it goes the same. I bought one of those smartwatches. It only cost me 20 quid because I don't need anything else. But I need to know how quickly can I run 10 kilometers? How quickly can I walk 5 kilometers? Am I improving? And why am I just cruising? So everything in my life that I know of, I'm just trying to improve because that's what I get a buzz out of, ladies and gentlemen. Mental improvement. I call it the Book of Horror. Can you see Jack Nicholson in here? He's like from The Shining. Anyway, my book of horror, and I've actually taken this from someone who gave me these. It's not my own, not all of them. But it's just this is what I have a tendency to do. And I want to be reminded before the trading day starts not to act in the wrong way. I want to act in the right way. So solution part 2 for me is posing specific questions has enabled me to develop a much sharper edge in my trading because I'm not embracing every single aspect of the game. Not every single aspect of it. What's the point in analyzing the FTSE in trading between 12 o'clock until 3 o'clock if you're only trading in the morning? It has to be specific to your particular circumstances. And furthermore, you also have to acknowledge and embed in your psyche that there is no amount of math, there's no amount of indicators, there's no amount of anything that can get you out of having to experience uncertainty. So if you want to trade consistently without the swings in confidence, then you have to learn to accept and tolerate, and perhaps even learn to celebrate the feeling of uncertainty. by doing the very things that you don't like to do. Become mindful of the things that you don't like to do. Just like in an inane example, imagine you're going to a public toilet and there's 10 urinals. You're most likely going to, if it's all empty, you're probably going to find that you want to gravitate towards peeing at the one that is at the furthest left or the furthest right. So force yourself to pee right in the middle. Yeah, it probably means that someone can stand right next to you. But it is those little things that will enable you to living a life outside of your comfort zone. As inane as it sounds, but your behavior, if you become mindful of it, will present so many opportunities for you to learn about what exactly makes you tick and what exactly makes you run away. So the reason why I wrote Best Loser Wins was as much for myself as for anyone else. And the chapters in Best Loser Win reflects that. That charts are only a part of a successful trader's arsenal. And the curse of patterns is not every pattern is 100% successful, because we have a tendency to see what we want to see. And if we don't set our mind specific exercises from a charting point of view, we'll most likely not improve. We also need to learn to fight our humanness and act on the very things we don't like to act on. And only by being mindful of them and having a process, a review process, will you actually be able to achieve that. And maybe you need to drive yourself into disgust before you actually change your behavior. So back when I was a kiddie or youngling, there was a movie with Emilio Estevez called That Was Then and This Is Now by Hinton. It was a movie adaptation of his novel. So when I look at how I did trade, I traded small, I was scared. I traded DAX without knowing what I was doing. I traded a Dow with no strategy. I won a little very often, and then I lost a lot once or twice. I suffered from the supermarket mentality, so when the Dow was falling, I would be buying and buying and buying. I traded without a real plan. I celebrated wins, and I extrapolated how much money I was going to make if I continued making money like this, and I ignored the losing trades. Well, let's look at how I am today. I trade fucking huge, and that's not my line. That's a broker that called me and he says, if you insist on trading fucking huge size, you can't trade at such tight spreads. So I changed broker, but that's another story. And I'm not scared when I trade big. I've developed index-specific strategies, so I know when I can trade the NASDAQ. I know when I can trade the DAX. I know when I can trade the FTSE. I trade the Dow, and I'm very respectful, like a surfer headed out to a raging ocean, because I know it can give quickly and I know it can take quickly. And I also know I lose often, but my wins are bigger. And I don't have an impressive win-loss ratio. But when I do smell a weak market, I smell blood. And I will add, and I'll add. Or like the NASDAQ trade that we did a few days ago. To me, that had all the hallmarks of all the research I'd done. And I was expecting new highs for the day. And we kept pushing and pushing and pushing. And we turned a losing day into a big winning day. So I trade with a plan specific to the instrument and the time of the day. And when I win, I don't look too deeply into it, but I do look. And when I am losing, I try to figure out, what could I have done differently? Was there something I did wrong here? So what I want to say is that slow progress is better than no progress. Remember that. Stay positive. And don't give up. Because if you really want this, all you have to do is to think differently than to everyone else. You are not the 90%. You're the 10%. Why? Well, because I'm training you. I'm guiding you. And I'm telling you what to do. And what that do is, you start with you beginning to set yourself specific exercises. You solve them. You review your losing trades. You don't necessarily celebrate big time when you win. And you care less. You don't care less when you lose. So you confront the pain head on. That's how we progress. Anyway, that was the last slide. I don't know if this will work, but I really wanted to give it the talk how it was meant to be. That was nice. It was nice to be able to give the talk how I wanted to, even though there was staff around me or people around me. So now I guess I can wish you a lovely weekend. Love you lots. And remember, I am here for you. I want you to succeed. I want you to do well. So today I met a lady after the talk who came up to me. And as I was talking to her, it occurred to me that what I should really do was to write a study plan. You know, what books to buy, what things to study. I think that would be beneficial for you. So I started scribbling notes. It'll take a while, of course. But like everything, I hope that we have a long journey ahead of us together. With that in mind, you take care now. Stay safe and have a restful weekend. I'll see you Monday. Thank you for being here. Bye-bye.